the FHFA, the Federal Housing Finance Agency, last week said, Happy New Year's. We are going to start charging more for people who are buying second home and investment homes. Aloha, this is Larry Gonzales from Aligned Mortgage, and I have some really important news. If you're a realtor, especially in the state of Hawaii, or if you are somebody who's considering buying a second home or an investment home, you need to listen to me. This isn't going to happen immediately, but it's going to start on April 1st. And most lenders are going to actually enact these price level adjustments probably middle of February, certainly by the beginning of March, so they don't have to start paying those fees. So what are the fees? Well, the fees are pretty drastic. So I have this document here. This is the kind of a PA document from Fannie Mae on what the charges are. All right, second homes. All right, you're going to get charged from 1.125 up to 4.125% charge on your loan for a second home or investment home. So say you're buying a $1 million home and you are putting a down payment kind of 20%. Actually, we'll go 20%. Correction, 15%. All right, you're going to get charged 4.125% fee. So what does that mean? So say you could get that $1 million loan for 4% interest rate as an investment property, all right, and there was no points paid. Well, now at a 15% down payment, you're going to get charged 4.125% of the loan, so $41,000 to get that same loan or same interest rate. All right, that's a pretty hefty fine. Now, you could take a higher interest rate, and then the credit that you would get would cover that cost. But that cost or that new interest rate might be in the 5s or 6%. Okay, so by virtue of adding these fees on, the FHFA is making it a little harder, or certainly more expensive for a second time or home purchaser or a investment home purchaser. So this is really big news. Now they're also going to charge more for high balance conventional loans. So in Hawaii, that's anything above $970,800. They're going to charge either from a half a point up to a full point, all right, in fees to a conventional home buyer. Now, this doesn't apply necessarily to first-time home buyers because these rules are being put into place to help protect and enable first-time home buyers. But that's a big fee. So for instance, another 15% down payment on a 30-year conventional, you're going to get charged 1%. Or actually, say you're going to have to do probably 20%. You're going to get charged 1%. So say your rate you could get was 3.5% at par, meaning you don't have to pay to get the rate. You're now going to have to pay a 1% fee. You're going to have to pay $10,000 to get the same rate. All right, so they're making it a little more difficult, or certainly more expensive for those people buying those homes. And why is the FHFA doing it? Because their mandate is to make housing more affordable and available to first-time home buyers. All right, and the FHA, they can't control the inventory. They can't. The FHA can't build houses. They're the government. All right. But they can control pricing, and this is their way of making some control over the process. All right. Is it going to, by doing this, they think, oh, you know what? There'll be more opportunities for first-time home buyers to buy, and maybe the housing prices will come down. Well, that may work in the mainland. I don't see that working here at all. I will say this: I know that over the last 2 years, there have been so many people who have been coming, really all over the country, coming and buying second homes. Or investment properties. I know I've bought an investment property. So it is going to, some people are going to fall out of that out of buying investment homes because of those fees. That's an extra, $40,000 on a purchase. But it's not going to solve our biggest problem right now, and that is inventory. Okay, so you're really, at the end of the day, why is this important? As a realtor, you have clients. You have a lot of clients probably on the mainland who are intending to come out here. and they're going to want to buy an investment property. May have been talking to you. I know I have clients who've been talking about buying investment properties for over a year. It's time to, or get off the pot and buy your home investment property. All right. Is this a good thing? I understand the why, but I am not a fan of charging people more money that goes to the government. Who collects this money? Fannie Mae and Freddie Mac. We're giving them money. What are they going to do with that money? I don't know. Why should we give them more money? Why don't you just say you can't buy more than one investment home? All right. To me, I just think I don't like giving any more money to the government than I already do. So I don't like it. I do like it from the aspect of, we got to make housing more affordable and more available, but that's not going to do it here, especially in Hawaii, because there's just no inventory. All right. Until you fix the inventory problem, you're going to have prices continue to go up, or you just let inflation just run off the rails and then interest rates start to go up even more. So I don't think it's going to have a huge effect, but for individuals, this is going to have a big effect. And if you're thinking about buying investment property or buying a second home, maybe you want to go buy a second home next to your family, near your family on the mainland, you got to get hot on it now. And I would suspect that over the next couple months, this is going to have a really big impact on inventory, because you're going to see a lot of people moving in real quick so that they can go ahead and make these purchases before these fees go up. All right. So please share this with your clients. You can share this with other realtors. I've talked to 3 realtors over this last week, and none of them knew about this. All right. And nobody's really talking about this, but this is a big deal, especially in Hawaii. All right. Thanks so much. Have a great day.